Today, I'm here with Saman Habibi, and we're going to be giving you the Durham Region market update. So, Saman, what's going on in the Durham region?
Year over year, new listings are up 19%. So that number is climbing, and I would expect that by the end of the year, we're probably going to be at an all-time high for the last 5 years. If you're a first-time home buyer, you're looking to get into the market, and you're looking to stay under $1 million and generate rental income, there are 71 homes, freehold homes, that you can look at and potentially offer on.
When I look at this, now you've taken 14,000 new active listings, and say I'm somebody looking for that separate entrance with a second kitchen under $1 million, I now have 71 that I can narrow that 14,000 down into. And all of a sudden, it becomes really easy to filter out from there, maybe certain neighborhoods that I would like to invest in, or maybe certain amenities that I want nearby. And I can filter that down even more and then start actually making some offers. Welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin, your host, and today I'm here with Saman Habibi, and we're going to be giving you the Durham Region market update. So, Saman, what's going on in the Durham region?
Hey, Adam. A lot has been going on. New inventory is coming to market. Buyers are out. Showings are starting to happen. There's some activity going on, and I'm excited to jump into it and talk some numbers.
Awesome. Let's get this pulled right up and get into it, man. I'm excited.
Yeah, thank you. I'm excited too. It's been, the summer came by and went by fast, but nonetheless, I'm excited to keep doing these market updates and give everyone all the information they need to stay informed and to have all the information necessary to make any decisions that they're looking to make. So today, what I want to do is I want to do a market overview. We'll talk about just general numbers. Then we'll dive into the specific municipalities. Then we'll talk about, home types. What type of homes have been resilient in this market over the past year? And then we'll take a look at some investor data, and we'll wrap up with, what I'm calling how is the market. And I've called it how is the market because I find every time I meet someone new, the first question they ask once they know I'm in real estate is how's the market? And that to me is a very broad question to ask. And, I find myself always talking about 4 or 5 things. So I'm quickly just going to point those out throughout this presentation. So let's just dive right into the numbers. So I think the message has been pretty consistent in the previous videos, and that is that new listings just continue to climb and climb and climb. So over the summer months, August 2024, that was a very slow month in real estate for us because of just seasonality, the summer months, and so on. But a lot of that inventory that got taken out in the month of August, we saw terminations increase. A lot of that inventory looks like it's coming back to market. So as you can see, new listings are up 22%. And since inventory has been increasing and coming to market, that has kept pressure on prices, and prices have been dropping down around by 1 to 2% consistently. So prices aren't moving that much. We had that ramp up from January 2024 till June of 2024. And then ever since then, we've just been kind of coming downwards, staying stagnant, not really doing anything with price, which is a good sign for a lot of the first-time home buyers out there right now. So prices have been pretty stable. Months of inventory is also stable as well. And that has to do with active listings just staying stable or going up, and sales really not moving either. We have all these active listings coming to market, but not many of them are selling. And as a result, that active listing number continues to climb up and up and up. And days on market has been around 22 days consistent. So it takes around 3 to 4 weeks to sell your average home. And of course, there are scenarios where homes do sell faster if they're in better areas, they're more turnkey, they don't require any work. So when it comes to days on market, that number hasn't fluctuated a lot, but if some people are in a rush to sell, there is hope. Some of these homes do sell fast, and if you take on the right strategy, you have the right home, you can sell faster. And sales price to list price ratio is right now at 100%. I always tell consumers that this number is in fact pretty important because this kind of gives you an indicator as a consumer what to expect when you're browsing on realtor.ca, House Sigma, whatever the website may be. You take a look at what these homes are listed for, and this should kind of give you an idea of whether these homes are selling for over ask price or below ask price. So 100% means that most listings on average are listed for what they're going to be sold for. So when you're looking, this kind of gives you some guidance on what to expect when you're looking at the market.
Yeah, that's a great point, right? Because I think as we're shopping, there's been different times in the market and in other markets as well, where we've seen this ratio be so far off that the number you're seeing on Realtor.ca really is a bad reflection of what you could expect to potentially pay. So it's really great to see the data like this and just talk about the so what there. The so what being the price you see right now is actually probably pretty darn close to what you would expect to actually close the transaction at, which is so nice as a consumer and as a buyer and as an investor to manage expectations by actually having a good idea. If I put this offer in, I expect that there's a decent chance I will close around the actual list price, which is, there were years there where that was not the case. And so I much prefer this balance.
Yeah, absolutely. This number used to be 120, 130% during the peak of it, which was alarming. And, since we're on this topic, right, I'm finding that the more first-time homebuyers I meet with, everyone's still going back to that suggested price on all these different apps. And the suggested price was somewhat accurate on the upmarket when the market was increasing. And there were still studies done on all of the various platforms. And the most used app, in my opinion, at least here in the GTA, is probably House Sigma. And their AI generated number wasn't in fact the closest either. So, people are depending on this estimated price quite a bit. However, they're still not very accurate, especially in a down market right now. So sometimes when we look at some of these listings that we go and we visit with our clients, they're bringing up the estimated price and it's just way out of whack right now. So although this ratio tells us that what's listed right now on the market is what most homes are selling for, I would still say that you want to work with someone that is hyper focused in an area that can guide you, because what you see online is not necessarily true or reflected of what's going on in the market, and it's sometimes a lagging indicator as well. So I know these numbers are out there, but you shouldn't solely be making decisions based on those numbers.
Yeah, I completely agree. And then the other soft value that is not measured here in these stats, right, is somebody's motivation, right? Why did they come to market? Why are they selling today of all days? Why are they selling for the price that they're trying to sell for? What is it exactly in the deal that they're looking to get and achieve as part of their goals? And I think that's always the lens we have to approach this with, right? What are our personal goals inside of our business? And then from that objective lens, even as a consumer, right? What are your goals in buying this property? And then through that objective lens, we can start to solve others' problems by trying to consider what their challenges and where the opportunities are inside an individual deal, right? Because these stats are fantastic to get an idea of the temperature of the market and get an idea of expectations. But at the end of the day, these are made up of aggregate sales from hundreds or thousands of sales. Each individual sale is going to be completely different in terms of the soft values there, the motivation, the why, right?
Absolutely. And what I've been doing is, as I figure out these, as I ask these questions and get these answers in terms of motivation and what people's plans are, I'm finding that I'm talking about timelines more than I ever have. So is this a 1 to 3 year purchase? Is this a 3 to 5 year purchase? Is this a 5 year plus? And as that time frame increases, then your appetite for risk increases as well. You can take on more risk because there's more likelihood of markets moving, markets correcting, interest rate environment correcting as well. But if someone is on the shorter end of that time horizon, then I pretty much say, guys, we're entering into an asset that in this time has been volatile for the last couple of years. So you have to really understand the risks that are associated with it and really decide whether if this is a house that, you're willing to pay a premium for. If you are, you have to understand some of those inherent risks that come with it simply due to the time frame. So understanding motivations is definitely the key part, but the second part would be, what kind of timelines are you working with over here? So let's talk about, I've been doing this the last couple of presentations, and what I've been doing is trying to figure out, where we are in terms of stats on a year-to-date basis. So from January till September of 2024, what's going on with our numbers. So if we take a look at our new listings, which is our first line, year over year, new listings are up 19%, which we knew. So that number is climbing, and I would expect that by the end of the year, we're probably going to be at an all-time high for the last 5 years. And again, this I think has to do with incomes not moving. As a result, more trouble into the consumer household, having to put these homes up for sale. Interest rates obviously increasing. You have debt increasing. So as a result, this is kind of indicating to the point that savings have been depleted, incomes aren't increasing, and as a result, there's some pain in the market, and that's why we're having so much new listings come to market. And then if we look at the line underneath it, the sold data, we have a lot of listings coming to market, but the demand is just not in line with the supply. So our demand is, although it's up 2% year over year, it's still, at the lowest that it's been in the last 5 years. So the second lowest. And as a result, the topic of the conversation is going to be active listings. So active listings right now are the highest they've been in the last 5 years. They're up 48% year over year. Fun fact, and I was just looking into this right now, this is in fact the highest levels of active listings since 2011. Okay, so we're, what is that? That's almost 14, 15 years now. We're at the highest level of active listings. And I'm just looking at the Durham region right now. If we extrapolate that, it would be somewhat similar for the rest of the GTA. And you can see that the active listings are really keeping prices pretty stable right now, like not a lot of movement. Year over year, we're down 1%.
Yeah, it's fascinating to see such a small decrease in average price for such a large increase in active listings. So it is fascinating. Like there's obviously a fair bit of demand in the city, right?
Yeah. Okay, let's talk about new and active listings, because I know that that's been, the story for the last couple of videos that we've been doing. So in terms of our active listings, right? So right now we have 1,360 active listings under $1 million. So that to me is great for first-time home buyers, because you have 1,360 homes. These are all type of homes that you can pick from. So if you're a first-time home buyer, you want to stay under $1 million and you want to qualify for CMHC financing, then you have quite a bit of options to pick from. If you are looking to get into the market in the new year and you're looking to take advantage of the new CMHC rules, which come into effect January 15 of 2025, then that means that there will be 1,917 homes for you to pick from. And as we know, this new CMHC rule is that you can now increase your purchase price from 1 million to 1.5 million, and you would still be able to put down less than 20% if you wanted to. In my personal opinion, you probably shouldn't do this because your level of debt is going to increase. But if you need some flexibility to get into the market in some of the outside areas of the Durham region, because you have people who want to live in Markham, for example, or in Toronto or in Mississauga, and that $1 million mark just didn't cut it. There wasn't enough inventory. So if you're in those areas, now you have the option to enter at the above $1 million mark, but just under 1.5. In terms of our investors or people even looking to house hack, there are 71 homes right now with separate entrances and 2 kitchens under $1 million. So if you're a first-time home buyer, you're looking to get into the market and you're looking to stay under $1 million and generate rental income, there are 71 homes, freehold homes, that you can look at and potentially offer on. For our investors, there are 108 homes with a separate entrance, minimum 38-foot frontage, under $1 million, and there's 54 of those homes under $800,000. So this is great for investors. Investors will have options here to look at potential inventory that they want to purchase. And I've really filtered for things that I look for when it's time to buy a bungalow to turn into a legal 2-unit, or even a side split that you want to turn into 3 units. And lastly, for anyone who wants to just avoid the freehold home, go into a condo, maybe because of the maintenance aspect, there are 100 plus condo apartments right now in the Durham region under $600,000. So essentially the message I want to drive home is that in the media, in these presentations, you're going to hear that there are a lot of new inventory. There's a lot of active listings. And as a result, I kind of wanted to just put on screen what kind of inventory and what kind of active listings are out there. And if you're interested, definitely reach out to us and we can, book private showings for you to show you, any of these homes that kind of fit within the criteria that you're looking for.
Fantastic slide, Saman. I really love this because this is really helpful for anybody that's, seeing all of these new active listings and new listings coming to market. I'm sure for a lot of people that could be overwhelming, right? There's a lot to look at. There's a lot to think about. And there are many different ways to invest in real estate. So I really appreciate here how you've broken down the number and the categories. And this is the difference, right, between an investor-focused real estate agent and somebody who's really thinking about what it is that you need to understand when you're going to make offers on these properties. We're looking for that separate entrance. We're looking for that second kitchen. We're looking for that frontage, right? And I love that you framed it like this, because when I look at this, now you've taken 14,000 new active listings, and say I'm somebody looking for that separate entrance with the second kitchen under $1 million, I now have 71 that I can narrow that 14,000 down into. And all of a sudden it becomes really easy to filter out from there, maybe certain neighborhoods that I would like to invest in, or maybe certain amenities that I want nearby. And I can filter that down even more and then start actually making some offers. And I love that you broke this down into a digestible slide where it's like 14,000 is a huge number. 71 is a manageable number. 108 is a manageable number, right? 100 condos under 600,000, that's a manageable number. Right? To be able to actually go out and make offers on. And I know in my company, when I was actively buying investments, we had to make a lot of offers. You might need to make 10, 20, 30 offers to actually get somewhere that you wanted to be. And so when you look at a number like 71, filter that down a little bit more even, and you've got your 30 properties that you can go pick 5 to go see tomorrow, right? And then make offers maybe only on 1 out of those 5. But you do that again day after day, and that's how we get closer to hitting our macro goals for 2025 and beyond.
Yeah, and all of these numbers could be even, refined even more by location, by community types. And that's the beauty of working with someone that, lives and works here, is that let's look at number 3 out of the 71 homes that have a separate entrance and a second kitchen under $1 million. I know that a portion of those are going to be in 3 neighborhoods that I wouldn't live at, or I wouldn't even take my investor clients to live at. So we can start carving those out as well. If I know that my investor clients want to put in an ADU in the future, then there's, a minimum square footage that we need to hit. And as a result, we can start filtering for those as well. So this is just meant to kind of give people the idea that, look, we can really pinpoint exactly what we're looking for, and we can go even deeper and deeper as we need to in order to achieve our goal.
Yeah, that's brilliant. Thank you so much. That's literally the spirit of this channel right here, right? This is Problems or Profits coming to you live through the screen, and understanding that these large elephants of new listings or financing changes or changes to CMHC, it doesn't need to be that complicated, right? If you work with the right power team, we can filter this down and narrow your focus into what really matters, so that we can, first with understanding your goals, we can help you get closer to that mark. So I really appreciate that, Saman.
Yeah, the biggest obstacle is finding the deal or the home. And then step 2 is, doing everything else that falls next. Okay, so I want to talk about the different type of homes and which home types have been resilient over the past year. So I'm doing a year-over-year analysis of 2023 versus 2024 of September, and I want to take a look at which homes have moved in balance. So as we can see here, detached homes year over year are down 2%. Townhomes are down almost 4%. Condo apartments are down almost 4% as well. People may look at those and say, oh God, these prices have dropped. But if you're a first-time home buyer, or you're looking to get into the market, or you're looking to upsize, this gives you a bit of comfort that if you waited out 2023 and you're looking to buy into the market now, you've created some savings over here. And then which homes have performed the best? Semi-detached and linked homes have been doing better. This makes sense because, especially the linked homes, I know it's not a big increase, but a linked home is pretty much a detached, 2-story home. It's just a shared common wall underground for the foundation. So there are still detached homes, but one of the walls underground is a shared wall. But as a result, it's very good bang for a buck. Right now, I tell all my clients who are looking to get in that your best bang for a buck is going to be a linked type home, because you're pretty much getting a detached home with a little bit of a nuance underground, which you don't even really see. But I thought this would be a good idea to put this out there as well, because we do sometimes get questions of, well, what kind of home should we be buying? Should we be buying detached, semi-detached, townhouse? And it's, right here for you. I say that most of the time, you have to go out and you need to see the detached, the semi-detached, the townhome, the linked home to know for yourself, because they all come with different square footages. But nonetheless, I thought, let's look at the data. And I was curious more so for myself to see which homes have moved down the most. I'm actually surprised that condo apartments haven't corrected as much. Maybe that's a good sign to show that they're resilient and there's still demand for it there. But this is the data.
I am actually a little bit surprised about that figure as well. I would have thought that there would have been a greater swing on condos than townhouses, and certainly like more than a 3.5% swing than a detached. So like, detached being a 2% swing and condos at 3.5. It is a bit surprising, but again, this is why we like to focus on the data, right? We have all these assumptions, we have pre-existing beliefs, we have things that we think in our mind about the market, but this is why we like to come back for these market updates and ground ourselves to what's actually happening, right? There's the drama and then there's the data. And of course, the news has a wonderful way of creating drama. So on the channel, we're really focused here on like, what are the actual numbers? What empirically can we say about the market? And honestly, the condos are pretty resilient with only being down 3.5%. I'm really surprised by that. But, look at this townhome price. If you waited that year and you're buying now into the market as rates are about to drop, as CMHC is increasing their purchase price as well as their amortization, they're getting rid of the stress test on that. Like that townhouse is now like almost $30,000 off, right? Like you just saved a car off that house, as we're leaning into a stage that's more than likely going to appreciate. So it's going to be interesting.
I like this slide as well because it kind of gives us a bit of an understanding in terms of what to expect price-wise for the Durham region. So I'm looking at detached homes as of September. So the average detached home in Oshawa is $817,000. The average detached home in Pickering is 1.177. Scarborough is 1.1. And then if you take a look at the surrounding areas, Markham, we have 1.6. Vaughan 1.5, Toronto 1.8, Mississauga 1.3, Oakville 1.8, Brampton 1.15, and Burlington at 1.4. The whole idea here is to show you that there is value in the Durham region, along Lake Ontario, along the 401 corridor, along the GO train corridor. It's a great place to live. It's a great place to call home. If you're commuting downtown from Pickering to downtown, your commute is around a 25-minute GO train ride. From Oshawa, which is the furthest east point. I mean, there's Clarington, but in Oshawa, your GO train ride door to door, it's probably going to be an hour 15, still faster than getting it in a car. So, just wanted to put on the screen what prices are like and give you a bit of an understanding in terms of distances and how far you are from Toronto.
Yeah, great. That's great reference as well. For people that aren't super familiar with GTA, it's really nice to see these prices overlaid with distance as well. Thank you.
Okay, so how is the market? This is what I was talking about. So every time I meet someone and they know that I'm in real estate, they say, how is the market? So typically what I tell people is, what's going on with showings? There's all these active listings, new listings coming to market. Are people actually going to see these homes? And the answer is yes. We're starting to see an increase in showings, people going out to homes and viewing these homes, which is a good sign because we need people to go out, look at these homes to see if they like it and if they want to actually offer on these homes. Conditions are acceptable. So financing and inspection condition, we're seeing more and more that homes are being sold with financing clause, inspection clause. There are still conditional sales with an escape clause, which means that you can buy this home typically with a sale of buyer's property. So you go out to buy a home, but you make it conditional on selling your own home. This clause is going to be harder to achieve as the market gets hotter and hotter, but in a stable market, you're still able to achieve and ask for that clause. Homes are not selling for 100, 200K over asking price. which is a great sign again. The AI generated prices are not as accurate, so don't depend on it. If you've never connected with a realtor and you're just solely looking at that number of the estimated suggested price on these different apps that you're looking at, I'd say your data is probably skewed. You want to connect with a realtor and get hard facts data. Typical closing day right now is 30 to 90 day closing periods. Could do it sooner, could do it later. It all depends on the negotiation. And right now we're finding that sellers want approximately 5% of the purchase price as a deposit within 24 hours. This is important because a lot of people have their money tied up in investments in the market, and markets moving up and down. So if you're looking to make a purchase in the coming weeks, in the coming months, you got to be aware of this, because once you get your offer accepted, you have 24 hours to make a deposit. And if you want to have a strong, serious offer, you probably want to have a healthy deposit as well. So it's important to note that people are asking approximately 5%, and they want that within 24 hours.
Yeah, that's fantastic. Great tactical information, guys. You can just take a look at this, get an answer quick. How's the market? But I think more importantly, the real takeaway here is just work with a great power team, right? Like the reason why we work with great power team members is so that they can go out and do the work to understand the environment that you're transacting in, so that you don't have to spend all your time doing the homework, right? You should spend your time strategizing how to make your real estate investing goals come to life, and less time trying to understand necessarily this information when your power team member can do that, right? Working with Saman and people like you see on the channel that we bring on the channel, they help you to understand these things so that you don't need to spend a bunch of time, making offers with 1% deposit, or trying to close, in 400 days and relying on the AI generated prices for your offer price. So I think that's the actual takeaway here, but it's fantastic to have it just written down simply. This is how the market is. That's awesome.
Yes. And I think we spoke about this last time as well, just to kind of, put on screen again what an average duplex in the Durham region is doing from a numbers perspective. This was a property that a client of mine purchased for $820,000, 20% down, 4.9% interest, 30-year AM. Mortgage payments are around $3,462. So if you just take a look at the left side, where I do a rental income expense, upper unit could rent for $2,300, lower around $1,900. So total rental income of $4,200. Mortgage payments $3,462, property taxes $375, insurance $130, maintenance vacancy reserve. We are still in a negative cash flow scenario. However, if we just take a look at what our mortgage pay down is, when we take a look at our rate of return on the investment, it's generated around 6% return. And if we tack on some appreciation there, it does do well, but we just like to look at it without appreciation right now. So this was a scenario where my investor client wanted to house hack, live in one unit and rent out the other. And the numbers worked out to be cheaper. So if he was to go out and rent a home versus buy one, live in one, and rent the other unit, the investor, my client's total output worked out to be less than what he would pay for rent if he was to just go and rent something out on the open market. So in this scenario, it made very good sense for him. If we take a look at the bottom of this slide, just some rental data. So if we're looking at single family homes, the median rental price is between $2,700 to $3,000 a month plus utilities and hydro. Executive homes are anywhere from $4,000 to $5,000 a month. There is a lot of demand for these executive homes because there's a lot of projects happening. So there's the OPG, the nuclear plant refurbishment happening here in the Durham region. So there's a lot of people coming from overseas to work here, and they're looking at these bigger homes since it's subsidized by the company. If we're talking about just legal 2 units, the upper 3-bedroom is anywhere from $2,300 to $2,500 a month. Lower 2-bedroom is $1,700 to $2,000. Lower 1-bedroom, $1,400 to $1,600. Those are plus utilities and hydro. And if you're in a multifamily, 1-bedroom is $1,100 to $1,500. 2 bedrooms, $1,500 to $1,900. And then 3 bedrooms are $2,000 to $2,300 plus utilities and hydro.
Yeah, that's fantastic data to have, because guys, this allows you to forecast, right? So now we know that the things that are on the market are roughly selling for what they're listing for. And now we have an idea as well, when we go and we turn these units around, if there's vacancies or if we do any improvements, or if we are looking to place new tenants, we have a good idea now what the actual revenue could look like. And that, again, just really helps us to forecast, right? What opportunities out of those, say that one class of 71 should we be considering given these numbers, right? Really quickly, you can do kind of napkin math or Excel math, right? Real quick, and just filter out what actually works for me and my goals. And so really quickly, again, that 71 might turn into 50. And that might then filter down again based on those other soft goals that we have. And this is how we narrow down our focus so that we can spend our time making great offers.
And we help our investors too. So as soon as we go out to see a property, we prepare this spreadsheet for them just so they can see what the numbers look like and what they can expect, you know, in the future years of holding the property. Okay, so the benefits of working with the DR group. So the DR group, as you know, the Durham Region Real Estate Group, we are local, we live here, we work here. Our investments are here. When you work with us, you have access to our list of 40 trusted tradespeople that you can call, use at your own discretion. In-house CPA, if you have any questions on how to structure your investment property, whether it's one, whether it's three, we can do that for you. In-house legal to help with LTV matters, in-house tenant screening and placement. If you want your property to be managed by a property management company, we have a very good connection and referral that we can make. And we do an annual property valuation and a letter of opinion on your investment property that you've purchased with us as well. And as always, if you want to connect with me, if you want to talk about your personal scenario, you can take out your phone, you can scan this QR code on the screen, and you can book a one-on-one call with me. No strings attached. You can just, you know, have a virtual coffee, talk about what you're looking to achieve. If you have something, if you need some guidance on what to do, we'd be more than happy to connect with you.
That's fantastic. Well, thank you so much, Saman. I really appreciate having you on the channel, and you always bring the data, and I love that. That's our number one focus here on the channel, is keeping things realistic, focused, and grounded in reality, and of course, focus on the data, not the drama. And that's what you brought today. So thank you so much for sharing these numbers and obviously the insight that comes with it. And I'm looking forward to seeing you back here next month, where we'll review next month's data. So if you guys are looking forward to see what's going on as the market changes and evolves, make sure you guys get subscribed, and we'll be right back here next month with more numbers.